Olivia Vaz here with the Einstein of Wall Street, and I had a question that he researched into because, you know, he is Einstein, and I want to hear...
I'm not an economist, let's be clear. And I know what I know, but I'm surely happy to admit when I don't understand something.
Peter, first of all, let's tell the audience what you know about.
So we talked about that the Federal Reserve bought $75 billion in repos. First of all, I didn't really understand what a repo was. I'm just being transparent and clear. Then it turns out that the overnight interest rates, bank to bank, spiked up to 10% overnight. The question that Olivia gave to me was, why did that happen and what's really going on?
Wait, I want to hear myself say it. So Peter, why did that happen and what's going on?
Okay, so cash available to banks for their short-term funding needs all but dried up on Monday and Tuesday. The reason I'm reading it is because it's stuff I don't understand. We're trying to inform you the best way possible. And interest rates in the U.S. money markets shot up as high as 10% overnight for overnight loans. That forced the Fed to make an emergency injection of more than $50 billion, its first since the financial crisis, more than a decade ago, to prevent borrowing costs from spiraling even higher.
Okay, so Peter, how could that happen when they're lowering rates? How did you ingest that?
Okay, so apparently there are a couple. Trader Chat says that the Saudi Arabians, after the drone attack, this is chatter, withdrew $2 billion from U.S. banks overnight, causing a bit of a drain on the market, okay, on overnight, on demand deposits. Secondly, the reason that makes more sense is the fact that September 15th is corporate tax day, okay? And we've been moving away from quantitative easing, obviously, so the money available in banks overnight obviously has been drying up slowly. Corporate tax day, September 15th, was a huge draw on all bank deposits, causing a bit of a higher demand on what's going on, lack of money overnight lending, and that's what made the money market spike.
So would you say this is weird at all, or is it actually kind of normal?
It sounds like it's something that within the realm of real economics, it does make sense. It does happen. Banking systems are fascinating things, right? How much money is being kept overnight? When there is a draw on it, the demand for it goes up, obviously, and then the price that they lend intraday banking money, it goes up. So it's supply and demand. It's bond. There's a bond component to it. There's a federal note component to it. There's an overnight interest rate lending note to it. And then we got the Federal Reserve today, which is more important to talk about.
All right,
and everything I know, I learned from this man who just walked by, Arthur Cash.
Peter, I have to say, I liked this little gig here. You know, if you guys like this interview with Peter Tuchman, please comment on Twitter. Nice things only.
Nice things only. I'm very sensitive.
Can't you tell?
Anyway, so let's talk for a quick second.
Great.
That the market has been trading sort of flattish. We do have the federal interest rate lowering projected today. Is it 25? Is it 50? Is there a projection for one more in October, November? We don't know. The market is right off the highs, the record highs here at 25, at 27.1 in the Dow and almost 3,000. We did break, we're a little below the S&P 500, 3,000 level. Is this going to be resistance? Is this going to be support for a next leg up? Is the lowering of interest rates today actually going to put fuel on the fire, or is it priced in? A lot of questions in the market today. We have a big S&P rebalance on Friday. It is the end of the quarter coming up. There's so much on the table, so much to talk about. I hope any of that made sense to you. If so, I love you.
It absolutely did. Thank you so much for recapping that, Peter. Maybe I'll hit you with another question next week like that.
I look forward to it. Giddy up.
That's Einstein of Wall Street. We love him here at the New York Stock Exchange.